In today's video, I'm going over some of the declines in Nashua's real estate market and explaining what that could mean going forward. I'm SBoghigian with Keller Gateway Realty in Nashua, New Hampshire, and the goal of this video today is to give you the nuts and bolts of what's happening in the current real estate market, what could happen in the future, as Nashua, as well as some other cities in the state, are some of the hottest markets in the country. And before we start, make sure to subscribe to my channel so you don't miss out on future updates for the rest of the year and in the future. But first off, before we jump into the numbers, I also want to set up some context here. Number one, a lot of the stats are varying month to month. 1 month it's up, 1 month it's down. You really want to look at multiple months over a long period of time. And it also varies by price point that you're looking at. In general, higher priced homes right now are slowing down more so than lower priced homes. And I'll dive more into that later in this video. And number two, prices are high and rates are high. I'm not going to sugarcoat it. Is it relative? Yes. Meaning, was there a time when there were 12, 14, 18% rates? Yes. So is 6 or 7% better? Yes. Is 6 or 7 still higher than where we'd like it though, regardless of historic rates? Also yes. So with the elevated rates, usually we see higher prices start to come down proportionate to as rates rise. We did not see that really happen on a broad scope across many of the markets in southern New Hampshire and northern Massachusetts. So, quick look at the numbers. Back in June, we saw a significant increase in the median sale price up to $455,000. In July, it came down to $450,000. Now, it went down, but it didn't really go down that much. Number of homes sold also is down in July by 27%, which is quite a big decrease, right? So now you say, Sam, okay, we have a slight decline in prices. We have a big decline in number of homes sold in Nashua. Is the market starting to shift? And again, I would say, first, it depends on the price point that you're talking about, but overall, no. And the reason for that is the inventory is still tremendously low. That, more than rates, is what's keeping prices where they are because there are simply not enough homes for people to buy. On top of that, newly listed homes in July were down almost 20% as well compared to June. So not only have we had low inventory, do we have low inventory, we are not getting nearly as many new homes coming on the market as we need to balance things out. Now, like I've mentioned before, the rate at which homes are selling does often depend on the price range. Homes in one price range may be completely on fire while others are sitting for longer periods of time. I will say also condition of the home matters. It will vary by price, by type of home as well. When you look at single family versus multifamily versus second home, investment properties, etc. Investment property and second homes usually start to shift first because they're not people's primary residences. But here I want to go over what the median days on market were and the number of homes sold in Nashua in July by price range to give you an idea. So starting with homes at under $300,000 in July, there were 5 sold and the median days on market was only 4 days, so very quick. $400,000 to $500,000 range, there were 31 homes sold and the median days on market was 6 days, still very low. $500,000 to $600,000 range, 10 homes sold at a median days on market of 6 days, still very quick, under a week. $600,000 to $700,000 range, 6 homes sold, again median days on market 4 days. $700,000 to $800,000, there were 6 homes sold and the median days on market were still only 9 days, a little higher but still very low. $800,000 to $900,000, there were 2 homes sold, 20 days median days on market. In $900,000 plus, there was 1 home sold in July, 17 median days on market. So you can see the majority of homes selling are up to about $600,000 as of recent, and they're selling very quickly. And then over $600,000, the number of homes sold goes down, but the days on market doesn't really jump until you get to 800 plus, and even those are still selling in under a month. The other thing to keep in mind, and the reason I use median days on market to measure it versus average days on market, is because after you get about to 700,000 plus, we do have a lot of new construction homes that will naturally be sitting longer than usual. So not always, they're not sitting because they're not selling, they need to be built, right? And so average days on market kind of skews that data. I'm going to highlight this metric in additional towns too in other videos. So if you have a particular town or city you're interested in, just put it in the comments and I'll do a video on those price range stats. But with this data, what does the outlook seem like going forward? Well, in my opinion, it really depends on how inventory does. I do not expect to see a massive jump in inventory anytime soon. I don't see a big indicator of that so far. I think rates will need to calm down a little bit more so that more current homeowners who are looking to move up or down feel more comfortable doing so. But I don't put all the emphasis on the rates because remember, as rates come back down, it is almost certain that more buyers will be coming back into the market, which will likely drive prices up again unless we have some sort of exterior factor that changes that. Now, I talk to people on a regular basis, I hear different opinions, but I'm going to put it out there that there's a growing likelihood, in my opinion, that we are getting pretty close to as low as prices are going to get on an aggregate. There will be exceptions, obviously. Will there be overpriced homes or homes that are just priced too high that will have huge price reductions? There will be. But from a primary residence market standpoint, I see no upcoming crash on the horizon. And if more buyers start coming in, that's going to jack the prices up. Now, consumer debt is an interesting part that I am looking at. People, during the last few years were refinancing to pay off debt because rates were so low. But the cost of living really hasn't come down in reality right now. Credit card debt is very high. So could we perhaps see a growing number of households decide to sell their homes, recoup the equity they have, and pay off the debts that they have? We could see that. It could help with inventory, but they still need to move somewhere, right? And so will they rebuy or will they rent? That's going to be the question. I think it'll be a little bit of both, but we'll have to kind of see how that unfolds, if it does, and where those people end up going. While there's not a tremendous amount of new homes being built in the area, there is a lot of apartment building taking place, or at least planned in the area. So that could perhaps bring downward pressure to rents at some point in the future. But I don't really see that having this huge impact on housing at this time. It could help with first-time buyers, making renting a little more affordable. But one final note I want to make is while I don't see any big crashes happening or prices plummeting anytime soon, I am seeing signs that we're toward the top of how high prices can actually go. For instance, when you look at multifamily properties, in many cases it's becoming more and more difficult to even finance certain properties because many are not cash flowing well, or in some cases even breaking even at the prices that they're listed at. And so once you get to that point, you can only raise rent so much, and there's only going to be so many cash investors who are going to buy a property that's operating at a subpar level, right? And so that's going to be a growing challenge as well. Long story short though, inventory is still historically low. Prices are still higher than ever, but they're not increasing like they were before, and there are no signs, in my opinion so far, of a significant change anytime soon. So to wrap things up, thank you for watching this video. When you're ready to jump in the market, or if you have any other questions regarding real estate, feel free to contact me using the information below in the description. I am SBoghigian with Keller Gateway Realty, and I will see you in the next video.